Drawing a pitchfork begins with identifying 3 points, where the price and time position of each point will directly influence future market behavior. 4 essential parts of every pitchfork are handle, resistance line, support line, and the median line. As mentioned, you can draw Andrew's pitchfork by selecting 3 points. These points should be selected from pivot points on the chart. The 4 steps to draw a pitchfork on your chart are as follows. First, select 3 pivots, 1, 2, and 3, the pivot 1 acting as the base of the pitchfork. Then, draw a line from point 2 to 3 and find its midpoint. Connect a line from the starting point to the middle point of 2 and 3. This line is called the median line. From points 2 and 3, draw 2 parallel lines to the median line. These are called the upper and lower parallel lines, or as discussed earlier, the resistance and support lines. The same applies to the upward pitchfork. And, of course, most trading platforms will draw that for you. Before providing practical examples, it's better to become more familiar with the different types of chosen points in a pitchfork. You need to ensure that your chosen points are fractals, not just pivots, as this can significantly enhance the credibility of your drawn lines. We will discuss pivots and fractals in detail in a separate video. In essence, you should know that not every pivot is a fractal, but every fractal is a pivot. A pivot is where price rotation occurs. If this rotation results in a reversal in a major or minor trend, we can consider it a fractal. Fractals can be identified by 5 specific candles, where the middle candle has the highest high or the lowest low among its 2 consecutive candles before and after it. But pivots are typically made of 3 or 4 candles, and the specifications mentioned for fractals do not apply to them. When the price reaches the median line, it will encounter one of the following situations. The price either bounces away from the median line or crosses it, reaching the upper or lower parallel line. In this example, you can notice that the price has formed a V-shaped pattern before entering a consolidation phase. And somehow it fails to reach its resistance level. It appears that the market is losing momentum. Then, with the creation of several strong bearish candles, it signals potential further downward movement. In this scenario, we select the 3 specified fractals on the chart and draw a standard pitchfork. Then we wait to assess the potential price reaction to it. As the market progresses, the price reaches its median line for the first time and swiftly rebounds from it. Then, the price tests the median line for the second and third time, yet once more it fails to breach it. The price repeatedly attempts to reach the median line, yet despite these efforts it fails to do so. Instead, it moves towards the upper parallel line. On the first attempt, it failed to touch this line, but it was able to reach this line the second time around. As you can see, the price has remained within the upper channel of the pitchfork throughout the entire downtrend, rather than the lower one. This suggests that the downtrend might be weaker compared to when the price moves within the lower channel of the pitchfork. When we consider this alongside the failure of the price to cross the median line, it should alert us that a trend change might be imminent when the upper parallel line is broken. In the end, our expectations have been met. Using Andrew's pitchfork requires knowing some rules, all of which are derived from the laws of action and reaction on price charts. These rules suggest that the price reaches its median line approximately 70 to 80% of the time. The price either bounces off, crosses with a gap, or fluctuates above and below the median line. When the price crosses the median line, before continuing its trajectory, it often returns to the median line and touches it for the last time. When the price reverses before touching the median line, it often triggers a much larger movement in the opposite direction by creating a void, known as Hagopian law. In addition, prices can rebound when confronted with simulated replicas of the median line. Here, you can observe that the price has entered a consolidation phase in the form of a symmetrical triangle. Therefore, if the price breaks either the upper or lower sides of the triangle, it may initiate a strong movement in the same direction. After confirming a clear breakout of the triangle to the upside, we can enter a buy position and place our stop loss below the triangle. Yet the key question remains, what is the right time to exit the trade? Answering this question is crucial because we aim to assess the risk-reward ratio of this trade. To accomplish this, we draw a pitchfork by selecting 3 valid fractals on the chart. Selecting the right fractal comes with experience, but the most important aspect is how the price reacts to the pitchfork drawn from those fractals. By drawing a line with a slope almost identical to the last downward movement of the market, and finding its intersection with the median line, we can anticipate that the price will likely reach this line. This enables us to predict the appropriate exit point, which, as observed, offers a favorable risk-reward ratio. In this case, you can see the price forming a V shape, making it ideal for drawing a pitchfork. So, by selecting 3 valid fractals, we can draw a classic pitchfork. Then, according to Dr. Andrews' first law of the pitchfork, we can wait for the price to reach the median line. On its first attempt, the price approaches the median line but cannot touch it and moves towards the upper parallel line. The price attempts to pass this line 3 times, but each time it forms a lower fractal, indicating it is unable to cross this barrier. When the price is repeatedly attracted to the upper or lower parallel line of the pitchfork like a magnet and fails to cross it, a strong trading signal is generated. This suggests that the price is likely to move sharply in the opposite direction towards the median line, as demonstrated in this example. After reaching the median line, the price struggles with it for a while. Notably, the price is forming a harmonic pattern on the median line known as the bullish 3-drive. In short, the 3-drive pattern consists of 3 consecutive price movements, each ending at specific Fibonacci level, after which the price moves in the opposite direction. Moreover, the divergence between the price and the RSI indicator enhances this pattern's credibility. Here, it is evident that, in both successive attacks, there is a clear divergence between the price and the indicator. When we combine these pieces of evidence with the second rule, which states that the price will likely bounce back away from the median line, we can deduce a high probability of the price reversing in the opposite direction, which eventually occurred. Based on the second law of the pitchfork, we argue that after reaching the median line, the price could encounter various scenarios beyond simply bouncing back from this line. In this example, another type of pitchfork is depicted on the price chart. This differs slightly from the classic pitchfork that utilizes a fractal as the base point. For a quick overview, the base point of this pitchfork can be identified from the midpoint of the vertical distance between 2 specific fractals on the chart. Nonetheless, the method for selecting the other 2 points remains the same as in the classic pitchfork. As evident, the price initially crosses the median line with a significant gap. However, ultimately, it halts at the 50% Fibonacci level within the pitchfork. After a series of unsuccessful attempts to cross this line, it takes on a shape resembling the 3-drive pattern mentioned in the previous example, swiftly moving towards its median line. As the price nears the median line, we observe an initial price gap before reaching this line. This indicates a robust breakout potential towards the upper parallel line. Subsequently, following the crossing of this line, another price gap emerges, affirming the price's continued trajectory towards the pitchfork's upper boundary. In this video, you can see that by selecting 3 fractals, we have drawn another type of pitchfork, which some trading platforms refer to as an inside pitchfork. We will cover how to draw this pitchfork in future videos. However, many trading platforms automatically generate this type of pitchfork for you. A closer look at the price movement near the median line of this pitchfork shows that the price is fluctuating around it. This behavior exemplifies one of the pitchfork rules, so we expect the price to move towards the upper parallel line after completing its correction, which looks like a descending triangle. Knowing this seemingly simple rule, you can immediately enter the buy position once the upper side of the triangle breaks. Then you can place your stop loss below the triangle and estimate the exit point the same way you did before. Here we've drawn another type of pitchfork called the shift pitchfork. In the next videos, we will learn the steps to draw it manually. However, like the inside pitchfork, some trading platforms can automatically draw it for you. As seen, the price fails to cross the median line on its first attempt. After retreating, it halts at the 61.8% Fibonacci level within the pitchfork. Finally, by forming a powerful candlestick pattern known as the morning star, it makes another attempt to breach the median line. After a brief correction, it successfully crosses the median line with a Marubozu candle characterized by a very tall body. Upon observing this powerful candle, many traders may enter a buy trade. However, more conservative traders can wait, and following the third law of the pitchfork, go long when the price falls back and touches the median line for the last time. In this scenario, by examining a lower time frame and identifying valid fractals, traders can position their entry and stop-loss orders at the top and bottom of these points, respectively. Ultimately, the price reached the pitchfork's upper boundary and reversed. Here, a classic pitchfork would be appropriate given the price movement. However, after some time, the price fails to reach the median line and moves back to the upper parallel line. As mentioned in the middle of this video, when the price is trapped by one of the parallel lines of a pitchfork before reaching the median line, and there are repeated tests of this line, it can be a sign of an impending explosive price move towards the median line. Here, considering the Hagopian law, we can also add that the price might initiate much stronger momentum in the opposite direction. This is after breaching the pitchfork's upper parallel line. Therefore, we wait for one of these scenarios to occur and then enter into a buy or sell position accordingly. A short time later, the price broke through the upper parallel line with a strong candle. Additionally, the hidden divergence between the price and the indicator confirmed this move. Following the breakout, the price retraced to this level and continued its upward move, so we might see more gain. As evident, the price didn't respond well to the second classic pitchfork and moved away from it. Therefore, we drew another type of pitchfork called the modified shift, using the same fractals. The price showed two exceptionally positive reactions to this pitchfork, indicating that we can rely on it in the future. As price movement continued, the pitchfork became more efficient. Subsequently, after departing from the upper parallel line and resuming its upward trend, the price returned to it and touched it for the last time.